Computer. Hey, everybody. Welcome to Derek Talks Real Estate, episode 16. This is airing on the 30th of June. We're recording for full disclosure on the 25th, which is Thursday. And so it will air this coming Tuesday, which I believe is the 30th. Yeah.
Yep.
So today we are joined by Mr. Matt Johnson from Community One Insurance. The Community One Insurance is a preferred insurance provider for not only Keller Williams South Park, but also the Redbud Group. Um, Great insurance company. They do an amazing job of taking care of our clients. Um, and I just wanted to take an opportunity to sit down with Matt today and kind of go over some topics that we see come up quite regularly when we're bringing someone to them for purchasing a house and some of the things that we're dealing with. Now, one of the things that I want to do before we kind of get into questions is give Matt an opportunity to introduce himself, introduce his company. I do know just from knowing Matt that Matt is a very proud Appalachian State grad. And he also grew up in the big, huge, well, part of his time grew up in the big, huge metropolis of Hickory, North Carolina. So, probably the most famous person to come out of Hickory is Matt Johnson. So, but no, so Matt, kind of tell us a little bit about you, how you got into insurance. I know, I think you said something about you have a degree that involves insurance. So, kind of fill us in on your background, tell us a little bit about Community One, and then we'll kind of dive into some stuff.
Yeah, absolutely. Well, appreciate the time, Derek, and getting to join you here. Um, I'm trying to think. I think we've had very few conversations without you trying to interject your saying of hickory mixed in there. You always enjoy that.
Well,
Um,
having lived there for 2.5, 3 years, Hickory is a cool town.
yeah,
But I just love Hickory. I don't know why.
you always default to it,
Yep.
and I'm for it. And I also appreciate giving me some fame from coming out of Hickory when we got the likes of Dale Jarrett coming out of there. So
Yeah,
some good company.
yeah.
Yeah. So as you already mentioned, went to Appalachian State, and I did graduate with a risk management and insurance degree from there. I did not go to Appalachian State pursuing a degree in risk management and insurance. Coming out of school, I didn't really have any true direction on what I wanted to do. I knew it was going to be in the business college. Um, Walker College of Business at App is what it's called. And originally started by saying accounting because my brother said, I think you could be a good accountant. So I said, all right, we're in accounting. Um, I think it was my second accounting class where I said, all right, I'm not doing accounting. But I knew I still wanted to be in the business school, and I had taken some finance classes. And so I said, okay, I'll kind of pivot, do the finance route. And part of the finance major at App State, you have to take the intro to risk management and insurance. And I was a pretty good student, but I would have to study really hard and work at these classes and things like that. But for whatever reason, in that intro to risk management class, it just really clicked with me. Just made a lot of sense, and the concepts and things that were coming with it was working in my brain. And so immediately started getting interested in that. We took our first test, and I think I got like a 96 or 98, and I thought, and that wasn't typical for me, and so I thought, okay, something's going on here. So I went and talked to the head of the department, and once I heard more about the program, and they had a I think 95% job placement rate for all graduates coming out with that degree. The resources that they give you are unbelievable. So went that route, met my wife through that degree, and haven't looked back since. So
It's interesting because I have a finance degree from Auburn. But the closest we got, and I have an accounting minor. So
Oh yeah.
the closest I got to doing anything risk management type, which I think Auburn now has that program,
Yeah.
which we didn't have it when I was there. Closest I got was actuary science
Mhm.
and statistics, and I was just like, nah. But I think the risk management would be pretty cool. So I wish we'd have had something like that. But then again, hey, we all had our paths that we went down. So
Right,
yeah.
absolutely, and I think you are right. You know, Auburn has a program now. I know Alabama has a strong one. South Carolina, Florida State, Florida. It's becoming a much more common major out there. App State is almost always in the top five as far as schools and their programs, which I'm a product of that. I got to do a lot of really awesome things. They bring in a lot of professionals in the industry to kind of guide these students. We do have an actuarial major that pairs with it, but those guys go to the math building while I'm in the
Mhm.
business building, and I'm not going to that math building because it's not for me.
Yeah.
Um,
We'll let them handle all that stuff in the back room. We'll bring the people to them that they can do their calculations and their figures on, right?
right.
That's why it's like when I talk to people about insurance, I'm just like, yeah, no. I'm going to let the people who are pros in that handle it. And so, Matt, for those of you that are thinking about buying, Matt is really awesome in doing clue reports for houses that you have an interest in. And um, kind of explain to people what a clue report is.
So, Clue Report, what Clue stands for is the Comprehensive Loss Underwriting Exchange. There's a bunch of big words just to essentially mean you're getting the claims history on a home. This is just the address. It is not going to tie it to any individual name, but it's going to give you 7 years of claim history on a home. And so the benefits of that is that if you are looking to put an offer in on a home and you run this report ahead of time, you know, maybe it comes back clean and that's ideal to have no issues. But yesterday I ran one and there was a $35,000 payout for a fire claim. And so as a buyer, and Derek, of course, that, some stuff is going to be on disclosures, but even say the buyers were in there 2 years and this fire loss was 4 years old, you know, that's still going to have to give some insight and maybe information for the inspector to look at as well and try to get a better idea. But it just gives the buyer more power going into those negotiations or submitting an offer to get an idea. Hey, what's going on here? Is there a red flag? Something that I need to see? I can say personally, purchasing my home, obviously I ran a clue report ahead of time, and there was a prior loss, and so part of our offer going in was we need to get receipts, invoices, and confirmation of what the claim was and have damages been repaired because sometimes it can be an ongoing issue, and so maybe one thing of patchwork isn't going to fully solve that. So it's a great tool for your buyers.
And it is something that needs to be run. I had never thought of running one, but I'm mostly a listing agent, right?
Right.
And you've run several for me, and they've been vital and very
Yep.
helpful with us. But in North Carolina, the most prevalent way and the most way of thinking is that you do not have to disclose something that happened to a house if it's been repaired, right?
Hmm.
And that's how it's always been kind of carried through. Well, the real estate commission has kind of adjusted their thinking on that because there have been so many things that have come up, even though the topic or the item was repaired, that has caused issues down the line. So now we're supposed to disclose things even if they've been repaired. But the best way to do that is to run a clue report.
Right.
And even I'm starting to think on listings, it might not be a bad idea to run a clue report on my end as the
Yep.
listing agent because, if the client doesn't tell you about it, you're
Right.
not aware, and I can be held responsible for that item on a disclosure. So, all right, cool. So the main
Hey,
thing
can
that,
I say one thing right there, Derek?
yeah, go ahead.
I will say, I actually do encourage it if you're going into a listing appointment, to run that clue report, because one, the sellers probably aren't thinking of a prior insurance claim and that needing to be something relevant on there. But if they do have that prior claim and you go into that listing appointment saying, "Hey, I already took the liberty of running a clue report. I see that a claim popped up in here. Hey, what's the story behind this?" Why that is important is because any buyer you have, if they're getting insurance, which if they have a loan, they will, a clue report will be ran before they can purchase a policy. And if that claim comes up, they will come back asking questions. And so, as the listing agent, you don't want to get caught up saying, "Well, actually, I don't know anything about this. Let me go to the sellers." And then, it kind of opened a can of worms. And so, if you go in saying, "Hey, I got this right here. Here's our game plan," they're going to come back asking for concessions for something or blah, blah, blah. We're already going to have this handled. And your sellers will absolutely appreciate that.
Yeah. Um, so yeah, that's something that really ought to take advantage of.
Mhm.
I interrupted you. Yeah, you hadn't had a chance to tell me about Community One yet. So tell me
Yeah.
about Community One. What makes you guys different than other insurance companies?
Yeah, absolutely. So, with my background in I'll just start referring to it as RMI, risk management and insurance. I came out actually on the commercial side of the industry, was working with these big wholesalers, working on insurance for a lot of coastal properties, condo associations, things like that, riskier things, bars and restaurants. And little bit of a nasty business. That's okay. It is what it is. But through that job, I met thousands of agents. Going to conferences, going into offices, and just meeting so many different insurance agents. And plenty of times I'd walk out of that office and say, "What are these guys doing? I feel sorry for any policyholder that's part of this agency. Don't like how this is ran." And so throughout, I guess I was probably doing that for 5 or 6 years, and kind of got to this point where I was like, I would feel really, I was feeling conflicted about the sector of insurance I was in, and thought, I'd really like to work directly with the consumer. I just to see that come to life would be really nice, to help people directly hear their thoughts, concerns, and so. Just by chance, I met Zach Ligon, our agency owner. Um, he was not even a year in business yet, I don't think. And we met, had lunch. I was not looking for a job. He was looking to hire somebody. This wasn't it. We were just working together on something. And once I heard about the agency, his way of thinking, his business practices, I thought, man, this is a guy that I'd really respect and would like to get to know better. So from there, we just had a few more conversations until I was his first full time agent that he had hired on. Thing about Community One, what's important for insurance for me is being a broker, seeing what's out there, knowing what the market says, and being able to work around things. And then two, customer service is huge, right? You don't want to have to just call a dial or a number, be put on hold, pulling teeth to get answers question, or them just say, "Oh, refer to your policy," and just make you read through things. So at Community One Insurance, full service, meaning we have dedicated service team, handling all clients, all renewals. We reshop everybody every single year, and I've never met a shop or an agency that does that. So just experiencing that and hearing everything, I was giddy to get to work with Zach, and we've been doing it over 4 years now, and have grown like crazy.
Yeah, and I think I heard you say one time in some of our conversations that you guys actually your customer service is in-house, right?
Correct.
You don't farm it out. It's not somewhere else in the world, um, and it's not farmed out to a third party, but
Correct.
you guys handle it.
Yeah,
So
absolutely. Which I think is invaluable, especially in this
yeah.
day and age with AI and call
Mhm.
centers and things like that. So, that was really important to me and a big part of why I wanted to join Community One.
All right, cool. Now, you guys are a broker and not tied into one particular company, correct?
That is correct.
So, advantages there, kind of, I mean, I know what they are, but you tell, the people that actually watch this, what's the advantages of having a broker versus someone that's tied into one firm?
Yeah, so of course here I'm not going to try to talk bad about any agency or insurance company. Everybody has, their lane and where they belong, but I know for me that if I could only work for one company and somebody comes to me and says, "Oh, I need a quote XYZ," and I present them this option, and they say, "Wow, that seems high. Is there anything else like you can do?" Well, if you're a captive agent like a State Farm Allstate, there is no other option. This is it. When they say the name your price tool, well, what that comes is with the sacrifice of coverage because they can't actually look in the market and see other options out there. And so I used to have this nice little slide that I could show where, like, this is my rating system. It was my own insurance. I'm like, here's what it spits out for me. And you'll see, this company is at $2,000. Well, then you can look at a company down here and they're $4,000. So twice the price. If I only had access to one of those companies, then maybe I only see $4,000.
Hmm.
So having the peace of mind of knowing I did my duty of looking around and making sure that I'm finding good price and coverage for these people, that to me is invaluable and it only benefits the consumer as well. One other thing is that if you're representing multiple companies, you are not reliant on one company. And so if there's a bad claims experience or something, you can push back and fight it. We have had times where we said no, like in this coverage it states X, Y, and Z. This claim is this, that, and the other, and we're able to push back on them. If you got one guy cutting your checks and you want to try to go fight against them, might be a little more reluctant to kind of push
Yeah,
back.
yeah, okay. I always think that sometimes options are always better than not having options. So that's pretty cool. So some of the things that we're dealing with here lately in the insurance world, there's been a lot of press lately about insurance costs.
Mhm.
Um, where do you see cost going over the next couple of years or so?
So, the increase in rates in the last 2 years has been significant. I mean, within our agency, we're seeing 40 in this past 2 years, we would see regularly 20, 30, 40% increases. And then we reshop the market and nobody else is better than that. Sometimes they are, of course, and we'll move you. But essentially what was happening is just the market got too crowded with too many companies competing against each other and undercutting. And then all it takes is one storm to then cause that company to need to flip the script, put those rates up, and then that goes across the board for everybody.
Yeah,
So these
and
past
we
two,
kind of had a little storm come through in North Carolina, right?
yeah,
Yeah,
unfortunately, yes. Um, and what you heard about that storm in Western North Carolina, most of that was the flooding. A lot of claims didn't get paid out over there. But in the Charlotte area, we had tons of downed trees, fences getting hurt, and things like that. So we actually did have a lot of claims in the Charlotte area from that. But regardless, with inflation and things after COVID, um, it was a tough time because insurance was going up like crazy and nobody was happy, myself included. But what we're seeing, especially this year on renewals, is we're actually seeing a lot of flat or even decreases on policies. So while it wasn't fun, I think it was just a market correction to meet inflation and the cost of building and things like that. And so now I think we're actually in a pretty decent spot within the market. So
okay.
over the next
Now,
few years should be more friendly.
you talk about COVID and the increase in stuff in correctional markets. How many times do you run across people who their policy has not changed since prior to COVID, and they're coming up underinsured if they have to file a claim.
Very often, um, which I know that's why you're asking that. But I have a financial advisor who's a good friend of mine, and a lot of times he'll ask me to review his clients' policies, and
Mhm.
so I'll go in there and I'll look, and there have been times where I say they are underinsured by $200,000
Yeah,
because they don't get.
because they base their home insurance off of the pricing from 18, 17, 16.
Yep.
And as you know, a lot of people were aware, we had what, cumulative about 67% increase in home values.
Right, exactly. And
So
so, and cost to rebuild. I mean, what was the cost of plywood during COVID, right?
yeah,
So
yeah,
suddenly that home's a lot more expensive to rebuild. And the issue with that is that if your home is underinsured by more than 80% of the value, you're going to get hit with a co-insurance penalty. We don't need to go into that, but if you haven't looked at your home insurance policy in a while, it's a good idea to see if you're underinsured.
yeah. All right, and then I want to get us kind of wrapped up here in the next 10 minutes or so.
Yep.
I really appreciate your time today. Talk to me about roofs. That has been a huge, huge issue for people buying houses over the last year or two. So talk to me about what we're seeing there, and are we seeing any improvement in that regard, or are we still going to be dealing with that issue for a while?
Um, I don't know that the issue will necessarily ever go away just because, as homes age and roofs age, if it's not replaced, that can come up. But it's starting to get better. We talked yesterday and was mentioning, these past 2 years, a lot of insurance companies essentially just closed their home insurance business, only focused on auto because of these roofs, and the limited markets for it were crazy. And so there is a lot more opening up, and a lot of it too is just that price correction. And so now that they're in line with the market, and the premiums are correct, now they have more capacity to open up the underwriting guidelines. And so when it comes to roofs, you have architectural shingles, you have 3-tab shingles, fiberglass, things like that. And these insurance companies know what the lifespan of a roof is going to look like. And so more often than not, an insurance company is going to max out at 15 years old. That gives a lot of wiggle room in the real estate market. Can work with that a lot. You get older than that. I have companies that can do it up to 20 years. Now, people talk to me and like, "Oh, is that okay?" I'm like, "That's fine." What I'm telling you is, I will get you a quote because they say, "I talked to so and so. They said they can't do it." I said, "I can get you a quote. It just limits what else I can see in the market." So like that's where I kind of talk. This is your price, and this is what it's going to take. But here's your options and what we can do moving forward.
And
So
I think where part of the problem with that comes in is everybody talks about how I have a 50-year architectural shingle, or well, it's got a 30-year warranty on it. Well, that's through the shingle company. That's not through the insurance company, right? And the
right,
insurance company is the one that's going to end up paying for
right.
that roof,
We
not the shingles company. So,
So Liberty Mutual, they had created this kind of area down in South Carolina. I think it's near Florence, where they have these home models, and what they showed us is that as far as like the shingle type, architectural, asphalt, fiberglass, whatever you want to call it, is not so as important. Which that is what the roofing company is saying. 30-year shingles. Those shingles very well may last for 30 years, but it's actually the glue that's underneath those shingles that can deteriorate and give rise to issues. So some people say no, it's superior. I've had people say it's commercial grade shingles, and from an insurance standpoint, it's more than just what that is saying.
now, when it comes to roofs, do they give any leeway to age if it's a metal roof versus? a asphalt or a tile roof, or is there
Yep.
anything of those that we can maybe extend that life or extend that time?
Yep, absolutely. So metal roofs are going to be favored when it comes to insurance. Most companies will go 30 years on a metal roof. In fact, if I see a metal roof, I don't really even bother to ask the age of it because I know that's what an insurance company wants.
Right.
Um, and two, you can kind of see it in the photos. But so metal roofs are great. Insurance likes them. Slate tile roofs, they're insurance companies also like those and will go older as well. So those are ideal. The caveat to that is that they're way more expensive
Yeah.
than the other types of roofs, right?
Yeah.
Um, but you're
But
not going to
we
see.
we were looking at a metal roof. I mean, we're going to have to do something on our roof in the next 2 3 years. We know we are.
Mhm.
And I was like, man, I want a metal roof so bad, right? And I looked at the cost of it, and I'm like, whew. But then I also have to address, I have some pretty big trees in my yard that drop acorns all the time. And so I have to figure out, do I want to hear the ping of an acorn off a metal roof all the time?
Oh,
Um,
yeah, good thought.
yeah, but I kind of thought that metal roofs were preferred for the insurance companies just because the durability of them.
Right, absolutely, and that's why in the mountains you see those up there a lot,
Mhm.
and kind of more hazard to snow and wind and falling trees and stuff like that. So
Right.
metal roof, slate, tile, those are good, but it won't save you on insurance because the cost of the home is going to go up due to those high value roofs.
Okay. But if you're buying and you're worried about the age of the roof, you're not going to have to deal with that issue if you're buying a home with a metal roof.
Correct. Right.
Okay. And if you're selling and you have to put a new roof on, it might be worth putting a metal roof just because, you know,
Mhm.
you're going to save or not save, but it's going to help the buyer in the long run when it comes to insurance.
I have a guy that has a few Airbnb properties and he puts metal roofs on all of them and says, I don't
Yeah.
want to think about it again.
Yeah. Okay, cool. What other topic in insurance do we see coming on the horizon that we need to focus on or be prepared for?
Some other things that can often jump out, and generally a question on all insurance applications that I'm filling out is the type of plumbing. And
Yeah.
so, what we see very common today is what PVC, some copper pipes, and things like that. No issues with those. So, typically it's not a problem, but even some insurance companies will give an age range. If it's a home from this, does it have polybutylene piping? Um, and that is a trigger word for a lot of insurance companies. If I select yes, quote invalid. Reason being is that the joints or the corners of these polybutylene pipes are famous for causing issues. So unfortunately, it can't really be just can we exclude the plumbing type, and just move that away from the policy? No, if there's polybutylene pipes, it's a no go. Thankfully, I do have some great carriers that are okay with polybutylene pipes. We have cleared it with them, said, hey, laying it out, polybutylene pipes, where do you stand? And they say, no problem, you can quote. So, thankfully, I have options.
Yeah. Again, one of the reasons that it's better to go with a broker than a captive.
Right,
Right.
right, absolutely.
Okay. All right. Well, I think that's pretty much everything. So, appreciate you taking some time and sitting down with me today. Um, how can people get a hold of you if they need to have a conversation about their insurance? What's the best routes?
Yeah, absolutely. So you can reach out to me directly if you would like. My phone number, 828-455-2335. That is my cell phone. That is the number I've had since I was 15 years old. Do everything off of it. So shoot me a text, give me a call. If you go to our website, community1insurance.com, there's a way for you to submit an inquiry for insurance. And so you submit it in there. If you want to mention Derek Blanton in there when you submit it, that'll come to me, and I'll know that came through this conversation. So always happy to help, give advice, run numbers, and be a resource.
Yeah. And I tell you again, Matt has been in Community One, are great partners with Redbud Group and with Keller Williams South Park. So wanted to give him the opportunity to come on and kind of talk about these things today. He has a much bigger knowledge of them than I do. So Matt, I do appreciate your help there. I appreciate the conversation today and appreciate your friendship. So
Yeah, Derek, thank
um,
you.
it's been a pleasure to talk to you, and I will see you somewhere down the road.
All right, thanks, Derek. Appreciate it.
All right, bud.
Bye.